Hello and welcome to this week's edition of Invest Africa. I'm Bronwyn Nielsen. Now, resources including oil and gas have played a vital role in widening positive investor sentiment in Africa, and it's becoming increasingly evident that Africa is not only endowed with mineral wealth but with energy wealth as well. On this episode of the show, we delve deeper into the oil and gas sectors on the African continent.
The majority of oil and gas reserves are dominated by 6 countries, namely Nigeria, Libya, Algeria, Angola, Sudan and Egypt. African countries are significant producers of oil and gas, and the new discoveries of these resources have helped trap investment and have become one of the key contributors to the continent's economic growth. Ghana has joined the continent's oil-producing countries, with daily production averaging at around 70,000 barrels per day from the 2 billion barrel Jubilee offshore field. Landlocked Niger also commenced its first oil production of around 20,000 barrels per day at the Chinese National Petroleum Company Oil in October last year. Output from new producers, however, still trails behind sub-Saharan African giant producers such as Angola and Nigeria. Gas is globally the fastest growing fossil fuel, and discoveries in Mozambique and Tanzania are positioning the East African region as a new gas frontier. According to the International Energy Agency, a 25% production growth over the next 5 years is predicted. Gas is forecasted to emerge as a crucial source of energy for both local use and to meet export demand in Africa. Africa's west coast holds 32% of natural gas reserves, and potential liquefied natural gas, or LNG, projects in places like Tanzania could open up export markets to the Middle East and Asia. Increases in gas production between now and 2015 are anticipated to be driven by LNG exports. But Africa's gas exports face a new challenge. Demand for LNG from North America could threaten the long term as a result of growing shale gas production in the US. This surge of unconventional production in North America has already driven gas prices down, which has prompted Angola's state oil firm, Son Angola, to tap into the Asian market. For now, infrastructural limitations, uncompetitive gas pricing, and the capital-intensive nature of gas projects have kept large-scale gas investments limited to a handful of African countries, even though gas is important to Africa's overall energy mix.
Joining me in the studio to take a closer look at Africa's oil and gas sectors, Bradley Surf, Vice President Operations, SAC Oil, Rajan Reddy, CEO of KZN Oil, and joining us from our bureau in Lagos, George Ashahan. He's the CEO of Geo-Concept Technical Limited. Gentlemen, thank you very much for joining me. I think perhaps let's start, Rajan, with taking a step back.
Yes.
With the discovery of oil, for instance.
Yes.
Let's start with oil and then isolate gas into a conversation a little later in the program.
Yes.
What happens?
Well, there's different aspects to oil as such, and you'll get the upstream, and that's what my colleague will chat about on the upstream, where you sort of drill for oil and crude oil. And where I belong is more the downstream, where it actually gets to deal with finished items and then into the market, and from the storage and refinery and out into the service stations.
So it's appropriate then to start on the upstream. Perhaps you can take us through the actual discovery, the exploration, and then obviously it goes through into downstream. George, we're coming to you in Lagos in just a moment. Bradley.
Yes, typically what's important is the exploration phase. So companies spend a lot of time exploring for oil. You need to understand whether the area that you're exploring for has commercial quantities of oil and gas. Once you find these commercial quantities, you then go into production, and from the production you then offload it and take it off to refineries.
George, we know what the discovery of oil has done for the Nigerian economy, and so too for the Ghanaian economy, and just in terms of where we're going with the oil sector, do you see it continuing to be a highlight of the Nigerian economy for many, many years to come?
Well, I think not just Nigeria is going to be like that for most of the countries in West Africa. If you see what's been happening in the last few years, you see Ghana coming on strong. There's been discovery of oil in Liberia. The same thing in Sierra Leone. And so many companies, especially the independents, they are very, very active in the west coast of Africa. And for Nigeria, up to now, oil and gas is still the mainstay of our economy. And we think in the short to medium term, it's going to remain like that until the government is able to diversify the economy such that oil and gas plays less role in determining the bulk of the budget of allocation from year to year.
Bradley, when it comes to exploration, do you see many more countries coming to the fore with oil and gas discoveries? You look at Mozambique recently.
Yes, certainly in Africa, from about 2000 to present, a third of the new resources that were added worldwide came from Africa. So there's quite a lot of areas that have opened up. As we've heard, the Gulf of Guinea has typically been has been very active in terms of oil and gas exploration. Now, certainly with the gas on the East Coast, the East Coast now is becoming more important from an exploration point of view, as well as we're looking at the African rift basins now in Uganda, the DRC, Tanzania, and then even Kenya, as well as Ethiopia, is now also becoming a bit more involved in exploration.
Rajan, how efficient are we when it comes to the downstream part of this equation?
We've always been extremely efficient in our country, you know. Sadly, we cannot say that for the rest of Africa to a large extent. Their refineries haven't been working to full capacity. So it's sad that at times they would actually have crude oil at their availability, but their refineries are either down. But coming to South Africa, we've always been very efficient, but even though our refineries, most of them are old now. And now we're getting into 2017 for cleaner burning fuels. So that's going to pose a huge challenge with the DOE working with the refineries and getting them up to speed. So there is talks with our refineries, and I think they are coming to the party, but it's going to take a lot of revamping and to make us compliant for the Euro 5 standards, and where we have issues like that, yes.
Staying with the refineries, George, back to you in Lagos. Do you think we're going to see more money being driven into upgrading refineries in West Africa?
Well, I think so. Right now, Nigeria doesn't seem to be pulling its weight when it comes to the refineries, but that's going to be something in the past. If and when the refineries are getting an uplift, we were told that they're going to spend about $1.6 billion fixing the 4 refineries we have in Nigeria. Don't forget that recently, Niger Republic set up a refinery, and they're even selling their products to Nigeria. We are told that even Guinea-Conakry is going to set up a refinery. So by and large, most of the countries in West Africa will realize that it's in their interest to set up active and efficient refineries rather than rely completely on imports.
How are the Chinese and Indian territories dealing with perhaps the upgrading of infrastructure when it comes to the refining of oil? Surely they're jumping the gun and seeing this as an opportunity. Do you have any thoughts on that, Bradley?
Yes, certainly from a infrastructure and oil and specifically gas infrastructure development, the Chinese and Indian companies have been very active in terms of pipelines in Africa. The pipelines in West Africa, as well as potential pipelines in East Africa. The Chinese companies and Indian companies are certainly getting involved in these infrastructure development projects.
And how are they competing with the likes of yourselves, Rajan?
I think we need to be not trigger happy, as we would say. Our dream should not be to own a refinery if it does not meet the economies of scale. So let's not get carried away with having a refinery, and whether you also produce crude. Because if you look at the Chinese refineries, if you look at the Indians, their refineries, they are up on 600, 700, 800,000 barrels a day processing. While we, at a very smaller level, I think PetroSA is maybe 40, 50,000 barrels a day.
So let's not get ahead of ourselves in the conversation, is what you're saying.
Yes, and I think if you got to look at efficiency now, And I think that is something we really got to be mindful, because our other refinery is also not producing, processing huge. You know, they average about 100,000, some 120,000 barrels a day, yes.
George, back to you in Lagos. When we look at political risks associated with oil and gas discoveries, how firm are they on the agenda when it comes to talking about the oil and gas sector?
Well, it will always come in the fore when companies are trying to analyze the political risk. But then, I think in most parts of Africa, we've had all manners of political situations. If you recall, in Angola, when the war was raging, Chevron was there producing crude oil. And I don't think too many companies really will shy away, because when there are challenges, that's when you actually make a good profit. And I think quite a number of foreign companies coming to Africa have realized that some of these issues are part and parcel of doing business in Africa.
We're going for a quick commercial break. More on Invest Africa when we return. Stay tuned. You're watching CNBC Africa.